Okay. All right. Yeah. So just a brief summary slide, really, this one to give an indication of what we're going to use for measuring a worker's weekly pay for calculating holiday. Um, Fixed hours and fixed pay, very straightforward. A week's pay is a week's pay. You know, split a year by 52 and you've got a week's pay. And there's no need to do anything in terms of legislation if it's just a fixed salary. Yeah, you can ignore all this really, unless you pay overtime, of course. Shift work with fixed hours. So we're making the distinction between shift work with fixed hours and no fixed hours. The way holiday pay is calculated is different according to which type of worker you are. So we might ask you what type of worker an employee is potentially, and you might need to know. I mean, people do talk interchangeably about 0 hours workers and freelance and casual and weekly paid and all these different terminologies, and it is reasonably important to understand which is which. I mean, if you're weekly, if you're a weekly paid worker and your hours are predominantly fixed, maybe 40 or 35 or 37 and a half, then it's calculated differently. So if you're genuinely 0 hours up and down like a yo-yo with no fixed pattern. In both cases, we're going to be referencing a worker's average weekly pay from the last 52 weeks. And we're going to be counting weeks in which they were paid for work carried out. So that's an important thing to note. We are going to exclude weeks in which they didn't carry out any work. They were on holiday and therefore didn't carry out any work. They were off sick, unpaid leave. If they had weeks where that was all that happened in that week, so they had no work that they were paid for in that week, then we would exclude it from any calculations. If they did a bit of a week, so they came in Tuesday morning, maybe do a couple of hours, then that week would be included. And you can see that, as with any average, that will have an impact on a rate of pay. If you've got a lot of weeks where they only did a relatively small amount of work, then it will drag the average down. And similarly, if they got weeks where they did an awful lot of hours, then it will push the average up. But obviously a 52-week average, over that period of time, then it should be a reasonable average. But if you've got someone who's just started and hasn't got 52 weeks, then you do need to bear in mind. I'll show you an example or two which just shows the impact that that the work pattern can have on the rate of holiday pay. So we're excluding paid holiday from any average. So if they got paid holiday, we wouldn't include it in the calculations, which makes sense to me. It's an average of an average, and it doesn't seem to make sense to include it, which is why I then am quite surprised that it is included in 0 hours contracts. So if you're a truly 0 hours or no fixed hours worker, then you would include holiday pay in those averages. So there's a distinct difference in the way you calculate it. And so what you apply for one worker is different to what you might apply for another worker, which is why you have to be quite clear about the categorization of workers when you're calculating holiday pay. So the differences are there. Holiday pay, what is included? And as we said, slide one, we're looking to replicate what an employee would have got had they been there. So if they earned it while they're there, then it should be taken into account when they're not, when they're on paid leave. So over time, I've listed the pay elements that are included, and then the caveat at the bottom, which is interesting and leads to a lot of debate in courts of law usually. But basic hours, basic salary, basic pay, they would have been included ever since I've been running payroll, I suspect, although possibly not. I can't remember that far back, to be fair. But in any event, they're basic pay elements. You would expect an employee to get their basic pay when they went on holiday. I don't think there's too much doubt about that. Overtime pay, including compulsory, voluntary, guaranteed and non-guaranteed overtime. So you know, at various points in time over the last 5 to 10 years, we've seen scenarios where people are identifying voluntary and compulsory and guaranteed and non-guaranteed overtime and using it or not using it in their calculations. Now we kind of, what you call it is no longer really very important. It's all down to the bottom sentence. Commission, performance related bonuses, sales premiums, call outs, on calls, overnight allowances, emergency premiums, piecework premiums, you name it, it would normally and ordinarily be included in the calculations. We as a default would include it, I think it's fair to say. And probably employers that you know, employers have been including it in a lot of cases for many years. I think it gets tricky with things like bonuses and commission. You know, is it a truly discretionary? You know, people have had a hard time for the last 12 months. I want to give them a bonus, and it's not something you can attribute to a time period, and therefore it's very difficult to, you know, to apply to the calculations. But if it's you know, a bonus that's earned in you know, sales related bonus or whatever, then you'd expect to earn it if you weren't there or if you were there. But everything is based on that bottom sentence, and it's based on the assumption that employees are paid regularly or repeatedly over a sufficient period to count as normally received. And there we have it, yet another grayish, it's actually yellow in this case, but I consider it a gray area. What is regular? What is sufficient? Is it repeatedly? You know, yeah, you pay your money, you take your choice. And I think certainly recent court cases have certainly tested some of the limits of these terms. And I think in common with most things, they, you know, what was probably deemed irregular 5 years ago is probably now regular. And I think it's partly driven by the fact that, you know, we've certainly seen employers try to call things something different, you know, to allow them to kind of exclude it from holiday calculations. I think over time, you know, it just becomes aligned, and you know, if you pay tax on it, if you pay national insurance on it, you're probably going to accrue holiday pay on it. And that's certainly, you know, in most cases the way it would go. I think, you know, where you probably got a, you know, a reason to look harder is with sizable bonuses that, you know, are you know, perhaps related to things that go on while you're in work rather than, anyway. That's what's included, pretty much everything, and that's what the way we would base our calculations. I had a conversation the other day with someone who, you know, we talked about service charges on restaurant, you know, meals. You know, it's being paid to the employees through PAYE. You would have a problem excluding it, I think, and certainly the opinion is that it should be included, but there's a, you know, school of thought that perhaps it shouldn't. We wouldn't make that judgment. We would say, you know, I think much in the way that over time has just aligned and just become a lump of money. I think these things do. It's definitely what history suggests will happen. And it's a bit like, you know, we've all kind of, probably, or a lot of people have gone through that process in relation to furlough and CJRS claims. You know, it's those discretionary, non-discretionary kind of judgment calls that you're making when you're calculating a, you know, what's reclaimable. You're making the same kind of judgment calls. You're referring to the contract of employment and seeing how explicit it really is. But yeah, it's certainly something that you need to bear in mind, because what it all means is holiday can be a damn sight more expensive now than it would have been in the past. You know, it's already, you know, you've got, when I started, you know, certainly it was 4 weeks holiday, might even have been 18 days, I don't know. But anyway, whatever it was significantly less than 28 days, and it was based on significantly less earnings, and it was with a significantly less national insurance employers costs. So it was a lot less expensive is the basic premise. The whole calculating holiday pay is based on, as I say, it's a weekly framework now, so you can forget your months. If you're paying people in months, you have to drill down and look at what that month really is. It's a series of weeks, and the way those weeks are, you know, from a holiday perspective, a week starts, certainly for a monthly worker, it starts on a Sunday, ends on a Saturday. If you're a weekly paid worker, you can tweak that to your pattern. You know, if your working week is Monday to Sunday, you can use it. If you're a monthly worker, you don't have that opportunity. It is what it is, much like SSP. So, you know, you're having to look at the behavior of workers who are notionally being paid monthly and some overtime. Where was that overtime earned? Was it in week 1? Was it in week 3? You know, was it in a previous month? Because you've got a cut off. So life gets a whole lot more complicated if you take it to the nth degree. Whether you do that is, yeah, I mean, the legislation is there. Whether you end up significantly different to the answer you would come up with when you do it the way you do it is another story. But everything's based on 52 weeks. And it's based on the last 52 weeks prior to the holiday being taken, weeks in which paid work has been carried out. So it's not necessarily 52 weeks. You know, I mean, just again, referring to furlough, those who haven't furloughed any workers and haven't done the calculations won't have the benefit of knowing these things. But, you know, furlough, you were basing it on an average for perhaps 11 months or 12 months, depending where your pay periods fit, as your average pay for the previous year, one of the reference points. Holiday pay isn't that simple, because you can't just take a P60 value or a 52-week value and divide it by 52. Because within that 52 weeks, there will be some holiday weeks where there's no pay. There might have been a week or two sickness. There may have been some unpaid leave, jewelry service, you name it. It will have affected those 52 weeks. And so what you end up doing is looking back more than 52 weeks. So typically, if someone's taken 6 weeks off on annual leave, then you're no longer looking at 52, you're looking at 58 weeks. And they've had a couple of weeks sickness, you're looking at 60 weeks. You know, the various reasons why it might have fluctuated are many and varied. The important thing is, you know, 52 weeks is about, we're all used to looking at 12 weeks. You know, prior to this, 12 weeks was what you would consider a reference period. Now you're saying, and those 12 weeks, you, depending how you did it, you might have looked back a bit further, because ACAS made reference to a normal week's pay, and there was no definitive answer to what was a normal week's pay. So you might deem, as we often did, you know, a normal week's pay, if the employee was on holiday, that wasn't a normal week's pay, that was an artificial average of an average type week, so we might have excluded it. Now, you know, the choice is taken out, but you're looking back a large number of weeks. Let's leave it at that. The one ray of sunshine within the legislation is that the most you'll ever have to look back is 104 weeks. So, you know, you don't have to look back 6 years for someone who's been with you 6 years, which is a positive bonus. But you do have to look back 104 weeks if you can't get 52 clean weeks within that 104 week time frame. You've got to keep going back until you get 52 clean weeks where an employee's been paid for work they've carried out. So that's a difficult task. You know, you've additionally, you know, we've got examples where employers have 2P transferred employees, and we're looking at pay data for 2 companies, because we have to take the weeks that they earned in their 2P employment into account when calculating the average. So and payroll software is great, but it was never particularly good when it came to 12 weeks. When it comes to 52 weeks and some of the subjective things that you need to look at, then all I'm really saying is it's not as straightforward and simple as we might like it to be. Week runs from Sunday to Saturday, unless a worker's pay is calculated differently. So that's for a weekly paid employee. So if as I say, you can be paid, we've got clients who pay from Tuesday to Monday, Monday to Sunday, so they can all continue to use those as their weekly references. But if you're monthly, you don't have that choice. It is based on Sunday to Saturday. So as I say, we're going to discount any weeks in which £0 were earned. 104 week maximum. If less than 52 weeks are available, based on the 4 weeks that are available. So if someone has joined you fairly recently, doesn't have that history, then you're going to base it on a lesser number of weeks. And there's a very vague statement somewhere within the legislation which is along the lines of if you haven't got enough weeks to make a reasonable calculation, then you need to use your judgment. If I was to praise it, that's what I'd say. So you know, in some cases, you know, someone's joined you on the Monday and been furloughed on Wednesday, or they've gone into lockdown on Wednesday. What is a reasonable determination of their pay for holiday purposes? You know, there's lots of judgment calls in relation to furlough, and here is another one. You need to, you know, and the legislation allows for that. It basically says, you know, it can't be right all the time. If it, you know, if it doesn't look right, you need to do something that is fair and consistent to make it valid. So here's an example of this. So this is the type of pay information that we, in the ideal world, we'd be looking at. So, you know, we're going to look at 52 weeks. This employee has earned a wage in every one of those 52 weeks. We haven't got to worry about anything being discounted for any reason. So in their case, establishing a weekly value would be a very straightforward I say very straightforward in relative terms. I don't think anything is straightforward, but in relative terms, as calculations go, it would be pretty straightforward. Take all the total pays, add them up, divide them by 52. There you have a weekly figure. And then when your employee takes some holiday off, if they take a day off, it will be, you know, 1/5 of that or whatever. So that's a relatively straightforward situation. Variation on a theme. I put these in really. They're unexplained. They're really to demonstrate the fact that, because the examples as we go further on, we've taken a snapshot of a number of weeks really to you know, to try and rule out all of these columns and pay. But if we're doing it properly, we're referencing these periods of time. And of course, you know, when we hit week 1, we're dropping off week 1. So it's not like you can calculate it 1 week and use it the following week, because it will change. You know, an average is such that, you know, if I knock off week 1 at 400 and I had a 500 at the beginning, then my average has changed and everything changes along with that. So yeah, you can't sit back and calculate it at this point in time and say that's it, job done. So it's worse than furlough in that respect. At least with furlough, you only had to do it once a month, or yeah, I guess once a week if you're looking at weekly. But so in that respect, it's even more onerous. Here's an example where, you know, we're having to bear in mind some additional factors. So someone is off. They've been paid SSP in week 13. The important thing is that they haven't earned anything for anything else. So they've got their £98 SSP, but they haven't got any pay for hours worked. So you would need to exclude that from your calculation. And this is where kind of software can fall down, even with 12-week averages. You know, unless you're setting up every pay element with regard to holiday day 1 in order to exclude it. Again, it's a bit like furlough. If you'd have known then what you know now, you would have marked each pay component to be included in furlough calcs or to be excluded. But of course, none of us knew that. But it's a similar thing here, really. It's knowing what to exclude. And if that 98 5 days of SSP had been split between week 13 and 14, so they'd had 5 days SSP, but it had straddled 2 weeks, then you'd be knocking out potentially, oh sorry, you wouldn't be knocking out that week, because you might well have a payment for both those weeks, albeit at a lower level, because they were only in for 2 days or 3 days, depending which week. So that's why you start then need to look at what happened in each week, because it's not sufficient anymore to know that someone had some SSP that month, because you would need to know whether it straddled 1 week or 2 in order to determine whether you should exclude 1 or 2 weeks from the calculation, and so on and so forth. So it gets very tricky very quickly. Weeks 35 and 36 in this example, holiday pay. So in this case, that's relevant as to the type of worker. If there's holiday pay in there, we've not got any marked, but if they'd have had you know, £600 holiday in both those weeks. If they were a 0 hours worker, we'd be wrapping it up into the calculation and including those weeks. If, however, they're a regular, they have regular hours, then you don't include holiday pay anymore. You would exclude those weeks. So it's about, you know, it's about knowing what you include and what you don't include, and life, as I say, it gets quite complicated quite quickly. But it's important that you just kind of understand the framework. This framework applies monthly or weekly, fortnightly, 4 weekly. You know, it's the framework that lays over the top. This is the detail that you would need for any pay period if you're going to, you know, carry out those holiday calculations in the prescribed manner. So there we go. So I've got a few examples of some holiday pay just to try and make it kind of a bit clearer what we're talking about. So we've got weekly Wilma. So she's an electrician for Sparks & Co, and she earns £11.50 per hour. Wilma started her contract in June. She's contracted to work 30 hours per week. She's accrued some holiday, 2.33 days per month during her first year. Overtime's paid at time and a half, and she's working loads of overtime is the key point, I think. So we're working through a worked example for Wilma. What I've done with the example is just take kind of three views of it, really. What it would have been in a dim and distant past, what it might have come out with in the more recent past, and now the figures that you would come up with, and they're very, very different, as you might expect. So this is an extract, because she only started partway through the year. Actually, this is a comprehensive record of her pay and hours worked, but you can imagine we apply this in the same way. It's just a bigger spreadsheet stroke table for someone who's been with you 52 weeks. So there's facts associated with her employment. She's got, you know, she's worked 740 hours, and over the period of time she's worked them, she's been paid £9,832.50. She's got a normal rate of pay, or basic rate, of £11.50. Her average rate of pay is obviously going to be a bit higher because she's done a fair bit of overtime. So her pay calculated on an average basis would be £9,832.50 over 740, or £13.29 an hour. And Wilma's decided that she's going to take a week off. You know, she's a worker. She's a, you know, she has an entitlement to 5.6 weeks of holiday. As I said before, what she you know, the actual entitlement bit we haven't looked at here, because that's, you know, an additional kind of part of the calculation. Has she accrued enough holiday to take it? And that's where you're applying some logic, maybe a, you know, 12-week average. If it was a worker who'd been with you a while, you might look back at the, you know, last 52 weeks. You might apply a 12.07% and say that was a fair and consistent way to allocate holiday. Whatever you do in terms of establishing initial entitlement, the legislation and guidelines set out very clearly how you come up with a figure to pay her. She's taking a week off, assuming she has an entitlement to that week, then she, you know, she will have it calculated according to the guidelines. And I've just set out some of the ways we might have done it in the past, really. I mean, I'm sure going back in the day, potentially we would have had a debate about whether it was guaranteed, non-guaranteed, voluntary, or whatever overtime. But having had that debate, it's perfectly possible that the employer might have said, you work 30 hours a week, you're taking 30 hours of holiday, and I am going to pay you 30 hours at £11.50, 345 quid. And I think no one would have complained about that at the time. I mean, it was, you know, that's the way you did it, wasn't it? You know, you were getting paid for what you did while you weren't there. The fact that you worked overtime while you were there, where you weren't there, you weren't working it, why should you get paid it? So, yeah, going back several years, that's the figure you might well have used. And there's a lot to be said for an enhanced hourly rate. There we're saying, well, you're entitled to, you know, your week is 30 hours. Because you work overtime, your hourly rate is significantly higher than £11.50, and we've calculated it above and said, okay, we're going to pay you 30 hours at an enhanced hourly rate, a rate that reflects the rate of pay that you've received while you've been, working. And if you applied that, then you come up with a higher figure, 398.70. And then the guidelines, if you apply the guidelines, they're quite clear, really, I think. What you do with the guidelines is she has a week's holiday that she's going to take, and you have to establish what a week's pay is. And a week's pay on that particular calculate, or that particular set of payments, is the total money she's earned in the weeks that she has worked. We got 2 weeks where she didn't work. Why she didn't work, then we don't know, and we don't really need to know. The fact is that in week 7 and week 18, she didn't receive any payment for work carried out. That's, no remuneration. She didn't get paid. And so they're excluded from the calculation of her weekly pay for holiday purposes. So her holiday pay, as per the guidelines, is going to be 983,250 divided by 18, the number of weeks in which she received a payment, and that comes out at 546.25. So significantly higher than what we might have considered an enhanced rate based on her overtime rates, etc. Well more than she would have got paid in years gone by. But a rate that's kind of commensurate with the general ethos and principle of holiday pay, that being that she should get the same while she's not working as when she did work. And in that case, looking at it, you'd say 546.25 is a representative payment based on what she's entitled to. So that is the way the legislation sets it out. I've done a few more examples along the same lines, really, just to show the differences. Clearly, there's a difference in if she'd worked week 7 and week 18, then it would come out different. So we've done that for 0 hours Zelda, or 0 hour Zelda. Zelda's a salesperson, so she's I think she's a 0 hours contract type person, isn't she? She's got no fixed hours. She works when she works, and she doesn't work when she doesn't. She gets some commission and weekend premium though, so it's not just a straightforward £9 an hour. But we've worked through the calculations for 0 hour Zelda. I've done 2 scenarios, one where she's worked every week and one where she's worked most weeks. But during the course of the week, she's carried out the same work. So scenario 1, Zelda's total hours for the period is 440. Zelda's total pay for the period is 6120, and for reference purposes, Zelda's average hourly rate is £13.90. She's going to take a week off. Now, the week off, we're basing it on an average weekly pay. What's her average weekly pay? Her average weekly pay for that time frame, and again, we're making the assumption that she's been with us those 20 weeks. We could equally well have done it over 52 weeks, but we foreshortened it really just to fit it on the page and make the calculations a bit simple. You could check the workings if you wanted to, export it to a spreadsheet, make sure it all adds up. I'm sure it does. So in her case, to establish her weekly pay, she's entitled to 1 week of paid holiday, and her average weekly pay is going to be the total pay that she earned. We're just going to have a quick scan across the top and make sure there's nothing that we feel should be excluded from the calculation. I mean, I think those things are rare. You're not going to find too many of them. But she's got an hourly rate, well, that's clearly going to be included in a holiday calculation. Commission is, no doubt about that one anymore. And a weekend premium, I don't think there's any doubt about that either. So we're going to include everything she's paid. So she was paid 6,120 for the 20 weeks that she was working. That gives her an average weekly pay of £306, and that is what we would expect to see her be paid for a week's holiday, £306. Then I've taken it on to another example where our friend Zelda is done exactly the same number of hours and earned exactly the same amount of money. The only difference is that she's managed to do it within 18 weeks. So for the purposes of calculating a average weekly pay, and on this occasion, We're going to exclude week 5 because there's no payment for hours that have been worked. And we're going to exclude week 18 for, again, because there's no payment for hours that have been worked. So on this occasion, we're running the calculation, and instead of her total earnings being divided by 18 weeks, by 20 weeks, we're going to divide them by 18. So we then come out with her holiday rate as being £340 per week. So we got £306, £340, same hours, same person, same earnings, just the pattern of earnings has led to a different calculation and therefore a different holiday payment for the same week's holiday. And it's really just to demonstrate the fact that it does make a difference how these hours are earned. It can be significantly affected, and you come out with different answers. I mean, she could equally well have, if she'd have been working every other week doing the same, so the first 2 weeks she did, 55 hours, but didn't do it in, week 2. So the work pattern is going to influence significantly what she gets paid for a week holiday. And again, the difficulty with Zelda is, what's the start point, where we again have the problem of establishing, we say she's got a week's holiday. How do we know that? We know she's got a week. We know she's got 5 weeks, 5.6 weeks, but what does that equate to? How many hours, how are we going to get a start point? She could continue taking these weeks forever unless we've got a point in time that we say, we know that you're entitled to, 5.6 weeks. So it is, it's one of those difficult ones. 0 hours leads to difficult questions in terms of how you establish that start point. If you've got 40-hour weeks, and they clearly work a week, it's easy. But if she worked every other week, is she entitled to a different figure? The holiday pay is going to be different, but is the entitlement going to be different? And that depends on how you calculate it. If you calculate it 12.07%, you'll come up with a different answer to if you calculated it based on a 12-week average, and that would come up with a different answer to a 52-week average. And there's no right or wrong. There's just fairness and consistency, which is the watchwords of a payroll professional. Fairness and consistency get you through anything. So determining a week's pay is it's just a job of work, really. I mean, you can do it, and so you can determine easily enough what, for any worker, what you're gonna pay for a week, because there's no complicated maths there, is there? I mean, it's a figure divided by 18 or 20. It's the transparency, it's the view of what's gone on in those, in that time frame. It's no good anymore to say she earned £6,120 in 20 weeks. It tells you nothing about where it was earned. I mean, she could have earned it all in weeks 1 to 10, and she'd be entitled to a significantly greater week's holiday pay then, but you wouldn't see it unless you look, get under the surface and start to drill down into it. I think that's what it's all about, is drilling down, and drilling down is time, effort. It's a thing that's difficult to do. You've got to record it, you've got to be able to manage the data. It comes with so many challenges, which I think is why if you come up with a similar answer based on 12.07% or something like it, are you reasonable to continue using a method to determine their entitlement, so long as you calculate the rate of pay on the basis of guidelines, which are quite clear? They're not too difficult. Paying for holiday, excellent. I suppose we had better pay them. So when should you pay the holiday? So we've established what their entitlement is. We've established how much you're going to pay them. When should you pay them? Is it now? Is it in 6 months' time? What are the options around this? So it is, I mean, the guidelines, no, this is legislation. Legislation allows allows the realities of work to kick in. So holiday pay should be paid when an employee takes their holiday and not rolled up into their hourly rate. So I think rolled up holiday in the true sense of the word is something that no one's done for a long time. I think not rolled up holiday, but holiday paid on a regular basis is something that has continued. If you're working 12.07% and you've got an employee who is working sporadically, there's clearly not an issue in terms of them taking 5.6 weeks of time off. So was it okay to pay them every 3 months, as some would do, or every month, what they'd accrued at that point in time? It never really was, but in working terms, it was, the alternative was to say, okay, I'm going to tell you you're going to work that week. You're going to tell me you want that week off as holiday, and we're all going to be happy. We get to the same point, just with a load of paperwork. But ultimately, the legislation requires that holiday is paid when the employee goes on holiday, or shortly afterwards. It does allow you to, the time to realise that if they went on holiday on the 25th of the month and your cutoff is the 21st, you might not pick it up until the following month. So it's not unreasonable enough to dictate that you've got to go back in time and establish that holiday was going to be taken. But in essence, holiday has to match the time when it was taken fairly closely. Part-time workers and those who take holiday when not working should receive their pay at regular intervals. So there we're really referencing the annualized workers, those who work in schools and preschools and the like, because again, they're working and they're getting paid. What about when they're not working? And again, it would be set out in their contract of employment that for the works, for when they're not working, those amounts of holiday would be paid on a regular or a set basis that was reasonable. Allowing for holiday in your budgets, additional cost to the business. Clearly, those last couple of slides, certainly Wilma is fairly stark in terms of showing how holiday pay and the cost of holiday pay could be an awful lot higher than it might have been in previous years. As I say, we've seen people try and rename it and call it other things to exclude it from the calculations, but one way or another, people are hot on your heels, and it's a big cost. Big cost. 5.6 weeks. Stick on your NI. Pension, of course, your employer's pension contributions on it as well. Which so what you got? 13.8% employers' NICs, 3% pension on top of your 5.6 weeks, calculated at a rate that you might not really like. It might be a good reason to emigrate to Australia. I'm not sure what their holiday legislation is like. I mean, their auto enrollment legislation is what we based ours on, but I'm not sure about their holiday. So maybe we'll find out one day, just out of interest. But yeah, so I think that must be pretty much it. We're coming to the end, I'm pleased to announce. To summarise, all workers accrue holiday pay. So, no one is exempt, regardless of the fact that they may have come and gone very quickly. Everyone accrues it. They might have left under a cloud and you felt that it was appropriate not to pay it. Hey, not to say that it's right or wrong. I'm just saying they're entitled to it. So yeah, that's the way it is. Holiday year dates in your contract, along with any other salient information. Be clear about starters and leavers holiday accrual and entitlement. So how do we calculate a starter's entitlement? How do we calculate a leaver's entitlement? Holiday calculations for fixed, compressed, shift and 0-hour employees differ. Again, focusing on those 0 hours and irregular hours. How are you going to do it? What is a fair and consistent and appropriate way to calculate that entitlement that you're working with? It's something I'm sure it will develop over time when people have started to focus back in on holiday pay. Other things probably have got in the way. So, this legislation is, what are we in, month 8. since it came into being. We're here talking about it for the first time. You know, most people are sort of doing the same because other things have simply got in the way. And one would hope that legislation will, you know, will develop over time to fill in some of the gaps that I think are there for all to see. Holiday pay includes all pay elements that form an employee's normal working week. So you're basically including everything paid in weeks, and the weeks you include are the weeks in which work has been carried out. Don't matter if it's only a little bit of work, £10, £1,000. If they earned it for work, then it's included. If there's no work carried out in that week, you don't need to consider that week. You would exclude it from the calculations. Everything's calculated in weeks. Yeah, made that abundantly clear. Not practical, not easy. You might question the logic of it, but that is the way it is. Monthly paid staff will need their entitlement and pay calculated in weeks to match the legislation. And I reckon, unless there's another poll, that is the end